Hello and welcome. I'm Brian Caplen, editor of The Banker. I'm here with John Everington, the Africa and Middle East editor, and we're previewing the August issue of The Banker magazine. Now, John, we've got a whole Africa special. It's called Africa Gets Fit for the Modern Age. So how is Africa getting fit? Let's start with the capital markets.
It's an interesting one, Brian, because capital markets, particularly on the debt side, are it's a fairly new phenomenon within Africa. We had the first onshore issuance, I think it was as recently as 2007.
This is from Ghana.
That's right, yeah. So there's been a lot of activity since then. So last year, issuance in the SSA segment rose to $15.8 billion within sub-Saharan Africa, so touching a new high.
All right, but of course this is mostly sovereign issuance. And what we want to see really is corporates coming to the markets. Is that happening at all?
It's very, very slow at this point in time. And it's very, I mean, you can see there's been a lot of growth within the SSA segment, as we've seen. But as you say, the corporate and private side is still not quite developed at this stage. And there are also a lot of developments which need to happen in terms of the secondary market as well. So there's been a lot of progress, but still plenty of stuff to come.
OK, now let's talk about the economy in general. Now, 2016, we had a commodities downturn. So that obviously hits African countries. What have we seen since then?
Well, we've seen a sort of a gradual recovery throughout the continent. I mean, within 2019, we've actually got predictions for growth across all segments of Africa, all geographic segments. What we've seen in that time after the 2016 downturn was that a number of kind of regulators, starting within the financial sector, are actually starting to tighten things up for the banks.
Because they're worried about it overheating.
Correct, yes. There were a number of banks which sprang up in the boom years ahead of 2016 within most markets within the continent. But then with the 2016 downturn, of course, there were people who got caught out by that. So regulations have tightened up.
OK, nothing like a good crisis to improve regulation.
Exactly, that's right. So there's been consolidation across the continent with a lot of banks, suffering in 2016. But then increasingly as time goes on, I think we're going to see a number of banks throughout the continent deciding to either merge with other ones or perhaps even close up shop just because they can't really deal with the new regulations. And this is going to make the whole sector much fitter as a result.
OK, so that very much fits with our theme of getting fit for the modern age. Now, you were in Mozambique earlier in this year. What's going on there?
Well, Mozambique is a very interesting case that, again, was one of the fastest growing economies in Africa and actually the world ahead of 2016. A lot of growth there. We had a loan scandal within 2016, which really set back the economy quite a lot. International donors pulled back, got a lot more hesitant. Things are starting to recover now. The sector is in a pretty resilient state. Again, the regulators brought in new rules and controls to really encourage the sector to be more robust and resilient, and that has worked.
All right, and we're looking for gas revenues, aren't we, shortly, which should be a big boost for Mozambique.
That's right, yes. It's been an interesting year for Mozambique so far. On the one hand, we had the terrible cyclones which happened in March and April, which led to a lot of loss of life and huge damages. But at the same time, this year was also marked by the signing of an FID by Anadarko Petroleum, which promises to bring an awful lot of investment into Mozambique in the years to come.
Exciting stuff. Let's leave it there. Thanks for telling us about the August issue of The Banker magazine, which will be out on August the 1st.